Good afternoon, distinguished colleagues, ladies and gentlemen. We would like to get this session started. So welcome to all colleagues in the room, as well as those that are joining this session online. We are going to be discussing Article 6 of the Paris Agreement. This is the continuation of a conversation that we have had for a while now, which is aimed at enhancing, improving our own understanding of the operationalization of carbon markets in Africa. As you know, the COP26 in Glasgow concluded the rule book for the operation of Article 6.2. And many of our governments have in fact started entering into voluntary agreements with project developers as well as with other participants in the carbon markets. However, this has been done in a context where the regulatory environment as well as the environment for managing and adjudicating the carbon markets has not yet been concluded. And we may be aware that at this COP, in fact, the focus of the negotiations is on finalizing the cooperative arrangements provided for in 6.2 to regulate the trade in internationally transferred mitigation outcomes, but also the creation of a supervisory body under Article 6.5, which could also ultimately be the context in which all carbon trading is regulated. There are a lot of complexities, as we have already experienced on the African continent regarding the operation of carbon markets, ranging from the ultra-low pricing of carbon to the actual transparency of trade in carbon credits in all contexts, really. And part of the objective of this series of discussions is to build a common understanding of how we can improve not only the regulation, but also the operation of carbon markets on the African continent. So we have a panel of experts on Article 6 who are going to take us through the discussion and also the plans for the future. The panel is going to be coordinated by Mr. Nesbet Samu, who is the Chief Director of Parliamentary Research Programs in Zimbabwe, and whose responsibility for Zimbabwe is to lead the country's negotiations on Article 6.2. Nesbet is going to introduce us to the panel and to the topic of this. So Nesbet, the floor is
yours. Thank you very much, James, for those introductory remarks. And indeed, we are here to continuously capacity build on Article 6, so that we build a market that has got environmental integrity, as well as the integrity of the market itself. And to take us through this process, I have on the panel, or the lead panelist, is Alhaji Mbaye, who is the vice chair of the supervisory body of Article 6, and Mbaye is from Senegal, Alhaji. And to assist us in the panel, we have Alik Muvundika. Alik also is on the supervisory body. Alik is from Zambia, and he is our specialist on the CDM in our negotiations as the Africa Group. We also have Mr. Mukutazi Steleki. Mukutazi is from South Africa, and he also sits on the advisory panel. And as already advised, my name is Nesbet Samu. I will be the director of ceremonies today. And the wrap-up of this session will be given by Dr. Yemi Katerere, who is from Africa CSO Biodiversity Alliance. Yemi is from Zimbabwe. So to get us going, I will ask our technical team to beam the presentation, which will be done by Mbaye. Please, can we have the presentation, please?
Thank you, Madam. Good afternoon, colleagues. As said, I'm Aladji Mbaye Diagne from Senegal. I am the Vice Chair of the 6.4 Supervisory Body. Under the Paris Agreement, we have an Article 6. It's one of the different articles of the Paris Agreement, which is dealing with cooperation, international cooperation, to meet parties NDC. We are not talking in the Paris Agreement about carbon market, but we are talking about international cooperation between parties that involve the transfer of international mitigation outcome, meaning emission reductions may be transferred from a country to another one to meet the NDC of the participating parties. And to do so, we have this Article 6 addressing how that international cooperation needs to be done. And we have 3 approaches. The first one, we call it a cooperative approach, but you will often hear about Article 6.2 only. It's about a bilateral, multilateral cooperation between countries that involve the international transfer of mitigation outcome produced through that cooperation. And we call it 6.2, Article 6.2, only because it was addressed in the Paris Agreement under the Para 2 and Para 3 of the Article 6. And we have another mechanism. We call it, at this point, the 6.4 mechanism. And it's a centralized mechanism, like the CDM, for the ones that know the previous KP, Kyoto Protocol mechanisms, we had the CDM. It's a like CDM mechanism under the supervision of the United Nations. And that mechanism registers projects and deliver certified emission reductions. We call them 6.4 emission reductions. And it's operated by the UNFCCC through the 6.4 supervisory body. And as said, we are all members of the supervisory body as the representative of Africa. We have 2 members and 2 alternates. And lastly, it's not showed here. Lastly, we have a last one, which is called the 6.8 approach, which is the non-market-based approaches. Because we have not only 2 mechanisms, you have cooperative approach, you have the mechanism, and you have the non-market-based approaches. And all activities that are not in the interest of the market fall into non-market-based approaches. When you see the 6.2 and 6.4 are the approaches and mechanisms under the UNFCCC, it's very tough to participate in those mechanisms. You need to recognize that under the Kyoto Protocol, African countries didn't benefit enough from those mechanisms. Mainly China, Brazil, India, Mexico, and in Africa, only South Africa and maybe Egypt benefited from those mechanisms. But the last 10 years, we have seen emerging projects coming from Uganda, Kenya, Senegal, Cote d'Ivoire, only the last 10 years, while the Kyoto Protocol, the CDM, was until 2005, started on 2005. But to participate in this Article 6, we have set up very stringent rules on the participation requirements. First, you need to be party of the Paris Agreement, it's obvious, but you need to have submitted your NDC. Third, you need to have arrangement in the country to authorize the transfer of the units. Under the Kyoto Protocol, any private company may develop its project and sell the units abroad. Here, under Article 6, it's not possible without the authorization of the host country. And to do so, you need to have the arrangements that are needed to provide that authorization. Because the authorization will have some implication. Since units are sold from a country to another one, those units cannot be used in the host country to meet the host country's NDC. To avoid double counting, we can't account those units in two different countries. If they are sold, that can't be used in the country. It's why we request the authorization of the host country, because that will have implication. So it's the first, you need to have the arrangement. Second, you need to have a representative, an authority, a designate national authority that will be the correspondent of the UNFCCC. You need also to submit every year your inventory. And that is very tough, because you have seen that in our country, we submit our inventory every 4 years. And we don't have a permanent infrastructure within the country to do in a regular basis our inventory. We hire consultants that go through the country trying to collect data to perform the inventory. But here, you need to have a permanent institution within the country to be able, in a regular basis, to provide your inventory in all sectors. You need also to indicate how the mechanism, the 6.4 mechanism, contribute to the sustainable development goal of the host country. You need to demonstrate that. You need also to indicate what type of activity you will authorize to participate. It's up to the host country to say project in the coal will not be accepted in my country as carbon market projects, or project with this and that. It's up to the country to decide. It's a sovereign decision. You need also to submit your long-term development strategy. And lastly, you may be involved in the preparation of the baseline. They are very technical issue, as well as the crediting period. For example, if you have cook stove project, you may decide the crediting period of cook stove in my country are not 5 years, but they are 3 years. And after 3 years, the project developer must renew those cook stoves. The country may decide that. As I said, you have the Article 6.2. It's the international cooperation between countries that involve the international transfer of mitigation outcome. And those mitigation outcomes, when they are solved, may be used by the acquiring party to meet its NDC. But the host country can't use that, and we try to avoid that double counting by applying what we call the corresponding adjustment. And we have already the Paris rule book. But here, during this negotiation, we have already defined in Glasgow. It was in 2022. We adopted the rules and the guidance to be followed by the participating party. But we have not addressed the detailed rules, the operationalization of the principles. And here in Dubai, we have to adopt the operational rules to make the mechanism build operational. And we have the opportunity as Africa, because as I said, we haven't benefited from the previous mechanism. But this time, we have many African colleagues involved in the negotiation. Myself, I'm the lead coordinator for the negotiation for Africa. But at the same time, I'm the lead coordinator for G77 and China. And we have many colleagues. We are more than 30 people coming from diverse institutions, private sector, government, NGOs, any area that are involved in the negotiation, to ensure that our concerns are taken into account when building the rules. Because there was that lack in the previous rules. Our concern, our objective situation were not taken into account when setting the rules. We argue, we discuss, we made submissions to get some rules improved in our favor. But this time, we are starting from scratch. We are building the rules. If you have people that are on the ground implementing projects, facing those issues, those people may bring those concerns into the negotiation and get our objective situation being taken into account when building the rules. And that is very important. The second issue is also the issue of transparency. Because as you know, the Paris Agreement is built and based on the transparency. Every country submits its NDC. It's nationally determined. No one obliges you to say, I do this and that. It's up to any country to table what its commitments. But since you have that commitment, the NDC, you need to report every 2 years in a standardized manner. And your report will be made public as well as your NDC. And your report will be subject to review. And the result of the review will also be made public. It's why it is very important, I see Padja, very important that activists also be very close to all those elements, because they can echo what's going on the market if there are some issue of environmental integrity. As I said, the 6.2 is a bilateral agreement between two countries. For example, Senegal has bilateral agreement with Switzerland, with Japan, to transfer mitigation outcome coming, emission reduction coming from project in Senegal to transfer those emission reduction in Switzerland and used by Switzerland to meet its NDC through this cooperation. But when you do so, you need also, in the participation requirement, to have a registry. Because as a country, you need to track all the units you sell abroad. All units will have a unique identification. And you have the responsibility to track those units and ensure there is no double counting and report regularly on those transactions. You need also to have, it's why you need to have the arrangement in place to track the IDMOs and to show how those IDMOs impact the achievement of your NDC. You need also to have an institutional arrangement for this authorization. I already addressed that. You need to track all the units, and you need to submit first an initial report before starting. You need to submit an annual report, and you need to submit a biennial report every 2 years. So you need to submit all of that to the UNFCCC, and those reports will be subject to review. And it's what we have here. Okay. It's what we have here on the tracking arrangement. We will have what we call a CARP, Centralized Accounting and Reporting Platform at the UNFCCC, that aim to track all the transactions within the world to ensure there is no double counting, to ensure that there is environmental integrity. And you'll have it through a database. And you'll have, at the national level, every country will have here a registry. A registry here. And after you have a registry, each country, and you'll submit your annual report in an agreed electronic format to allow for aggregation of all reports. Or you link your registry directly to an international registry, because the UNFCCC will have an international registry to track all the units that are transacted within the world. And based on that, we will have a review of all the report, the initial report, the annual report, and the biennial report. And as I said, your report, the review and the report coming from the review will be made public also. And all inconsistency will be shown, and everyone will know what happened between Senegal and Switzerland if we have this transaction. Okay. Next. That is, in general, in 6.2. 6.2 is about international transfer of emission reduction from a country to another one. But how those emission reductions are generated? They may be generated by UNFCCC through what we call the 6.4 mechanism, but they can be generated by what we call currently independent standards. In the past, we call them voluntary standards. You have, for example, gold standard, Vera, you have ART+, and so on. Those standards may generate units in your country, and you can use those units in 6.2. Now we are talking about the mechanism under the UNFCCC, which is the 6.4 mechanism. It's a centralized mechanism operated by the Secretariat and the supervisory body and report to the CMA, the Conference of Party meeting as a meeting of party of the Paris Agreement, meeting every year. And it's what we are doing now. Our meeting here is that we report to the CMA and get guidance from the CMA, because it's the parties are the ones that will decide at the end of the day. And that mechanism is the one that will replace the clean development mechanism we had under the Kyoto Protocol. But at this point, we have both running in parallel, because the 6.4 is not operational. It's why we maintain the CDM until the 6.4 being fully operational. And in this mechanism, you have the activity cycle, which is like the same like the one we had under the CDM, meaning if you have your project, you have to submit your project for registration, and it's an independent entity called DOE, Designated Operational Entity, that will do an audit before your project being registered. After being registered, you implement your project and you deliver emission reductions. You have another process which is called the verification. Another DOE will come in your country to verify whether you have run your project as planned to deliver certified emission reduction. And only after that, you get those emission reduction, you can go under the 6.2 to transact those emission reduction with the authorization of the host country. And you have all the activity cycle. You have methodologies as we had under the CDM. Because to get your project being registered, you need to apply the methodologies that are defined by the supervisory body. And here we have, under the supervisory body, submitted to the CMA a document, recommendation on how to develop the methodologies. And we expect that recommendation to be adopted by the CMA to allow the 6.4 starting to develop methodologies. At this point, the supervisory body of the 6.4 can't develop methodology before getting the approval from the CMA, meaning parties, of the recommendation made by that supervisory body. Second, and in addition to the recommendation on the requirement for the development and assessment of methodology, we have another important document submitted by the supervisory body called removals, how to address activities involving removals. When we talk about removals, we have this, the nature-based removals, including forestry activities, but you have also technology-based removals. The supervisory body made also recommendation on how to address all type of activities involving removals. The supervisory body expect also that the CMA here, CMA 5, adopt those recommendations. It's only after the adoption of those recommendations that the 6.4 mechanism, which is a centralized mechanism of the UNFCCC, will be operational. If not approved, if not adopted by the CMA, the 6.4 mechanism will not be operational. We will need to come back next year with another recommendation to be adopted by the CMA. It's why we have very tough discussions currently. And in that, you have also one important element is the sustainable development tool. Because now, when you have your project, that project will be also assessed in line with this sustainable development tool. In the CDM, the Kyoto Protocol mechanism, it was voluntary. But in the 6.4, it's a mandatory to apply the sustainable development tool and to monitor those indicators and to be subject to a verification by a third party. Meaning the sustainable development criteria are taken at a very higher level in this new mechanism. We also have another important document, which is the procedure for grievance an appeal of this mechanism. We have that process that we didn't have under the CDM. If you are not happy with the decision taken by the supervisory body, we have a process for that. We have a draft that needed to be adopted later. And yes, and under the 6.4, which is a centralized mechanism, we have a specificity compared to what we had in the past. When you have your project validated under the 6.4, register under 6.4, you implement your project and you deliver emission reductions, you may decide whether you want those emission reductions being authorized by the host country for any usage. You can use them to sell them to another company to be used for meeting the NDC of another country. You can also sell them in the aviation sector, because the ICAO has set up a very big market. It's a new one, with very clear rules asking all companies to offset their emission. At this point, it's a pilot on a voluntary basis. But from 2025, they wanted to have it as a mandatory, meaning each company will offset its emission by buying units anywhere. So it's why here also, those units generated by the 6.4, you may use them whether to someone that will use it in another country to meet the country's NDC, but also in the aviation. But at the same time, the 6.4 mechanism will generate units that are not authorized, that can be used for the voluntary market. You will have two types of units. The first one, we call them 6.4 emission reductions, and the second one, we call them mitigation contribution units. What are the benefits using the 6.4 instead of going to gold standard or going to Vera? Here you have a centralized mechanism established by UNFCCC, which is very credible and recognized by all parties. You will have also very robust methodologies to ensure the environmental integrity and follow the sustainable development goals. You will have a very stringent process for eligibility of your units. You will have a very robust framework that came from the one we had under the CDM, but with some improvement. You can also, as I said, sell your units, whether in the compliance market or in the voluntary market. That are the main advantage. It's what we show here. The use of generated units, you can have it more from 6.2 that can come from any others, and you authorize them. And since you authorize them, those units can be used for NDC, that can be used for CORSIA, we call it the civil aviation. You can use it for any other purposes. We call it any international purposes. But you can use it also at a domestic level, because you may have an internal market. For example, if you have a tax, a domestic tax, you can allow participants of that tax to offset and not paying the tax, but buying units coming from here, from the 6.4, developed in your country. As in South Africa, they have it. And lastly, what do you need as host country? As I said, You need to have the institutional arrangement to participate. You need to have very robust human resource and skill for the development of all of that. You need also to have the legal arrangement within the country, as well as you need to see how you will deal with the share of proceed is the contribution to adaptation. Because in the 6.4, I forgot to say that we have 2 new requirements compared to the CDM. Under the CDM, 2% of the units are levied for the adaptation. In all projects, we take 2% of the units and we give them to the adaptation fund to be monetized for funding adaptation project. Here in the 6.4, instead of 2%, we take 5% for adaptation. And in addition to that, we have also 2% for the atmosphere. We call it overall mitigation in global emission. Meaning, if you generate 100 units, you will get only 93 units. Because 5% will be given to the adaptation fund and 2% to the atmosphere. To have a very robust mechanism that also benefit to the atmosphere as well as to adaptation. And that's all for the 6.4. I let now colleagues.
Thank you very much, Mbaye. Can we give him another round of applause, please? So Mbaye, you took us through, the cooperative approaches, the 6.2, the market mechanisms in 6.4, and the market, approaches. I will now ask Kutazi just to reinforce a couple of things with some examples, more specifically giving us the advantages of market mechanisms, specifically in addressing our NDCs, which is essentially our climate change management action plans. And can you also, give us examples of the institutional arrangements, that are required to operationalize 6.2 and 6.4? Kutazi, please.
Good afternoon, and it's a pleasure to be here with you, and thanks to the presentation by my colleagues. With regards to the key questions that I think we're at the most interesting time in terms of, carbon markets. Everyone has been, awaiting this moment anxiously in terms of when are you delivering, getting questions from people on the ground, communities, project developers, as well as from the policy side, in government. So I think the Article 6 mechanism is closer to delivering. And indeed, Mbaye has touched on a number of aspects, one of which, if I may single out, is the fact that we need to be ready as developing countries. We lost a moment or an opportunity under CDM, under KP, because we were sort of last movers within our region in Africa. And he has alluded indeed to the comparators of the likes of China, India, Brazil, which are also developing, countries. But at this point in time, the state of readiness on our part as developing countries is key. And the pace at which we move, the speed at which we move, we also need to make sure that we set on the ground proper institutional mechanisms, on the ground. But let me zoom to the key questions that the comrade has raised, and has put to me, especially in relation to the NDC. The natural provision under the Paris Agreement, Article 6.1, points on the fact that parties have an opportunity to make use of Article 6 in the implementation of their NDCs. and it's key to underscore this particular aspect, that as we use this instrument, the key for us as developing countries is to make sure that we do meet, our commitments as parties, because there are strong obligations, under Paris. And that's already provided for, under the Paris Agreement. Secondly, the point that one would prefer to put a program director is the notion of sustainable development. Carbon markets is not necessarily a pie in the sky, but our context is that of the pursuit of sustainable development. Currently, as developing countries, we are faced with challenges of unemployment, poverty, inequality, and currently high levels of indebtedness. And therefore, as we continue to implement Article 6 activities, under all those provisions that Mbai has indicated, it will then be key that we balance those macro priorities, as countries on the ground. The lessons we can draw in this regard is that under CDM, the Clean Development Mechanism, the precursor to Article 6 under Kyoto Protocol, is that it enables us to scale up the pace and rate at which we penetrate technologies, in our countries. And this is, important because through technology penetration, you also get other spin-offs and other, additional benefits that enable, to learn lessons, whilst we at the same time we pursue the goal and objective of making certain that our climate action is also progressed and is carried forward. This is also a channel to advance or to facilitate carbon, through carbon finance. We are able to mobilize additional resources. What we observe in terms of the macro, dimension of things is that developed countries on the climate finance side, they have reneged on their obligations, and as such, the resources they channel, to developing countries has gone low. For instance, you realize that there is an increase in terms of co-financing requirements, whilst there is a decline on the grant side of things. So within that context, the carbon finance, the carbon markets channel enables us, to enable, the pool in terms of, getting additional finances. Let me then shift to the second part of the question, which has to do with the examples of institutional setups. At this international, platform, we work on the generally broad kind of institutional, guidelines. Mbai has referenced, guidelines, rules, modalities, and procedures under Article 6.4 of the mechanism, the guidance. These are broad, right? So what is important is that as we domesticate these in our respective jurisdiction, we safeguard our policy space. We also safeguard the space of our sectors, especially for low-hanging fruit, if one may put it that way. You do not want to see a situation, Mbai has cautioned here to say that there are additional obligations now, especially when it comes to reporting and accounting through the use of these. And there's a bit of more stringency under the Paris regime than the case was, so you cannot double count. It therefore means that you must have a framework. Program director has indicated, has asked, what are the examples? You've got countries that are pace setters in this regard within our region. And this is something that should enable us to learn from each other. Key amongst these, you have the case studies of Zimbabwe, for instance. They do have a framework which is aligned to their regulations and so forth, because you do not want to outsource the policy space to your detriment. Some of these proposals are presented to be having, immediate benefits, but we also need to be, long-term in our perspective, so that we do not only realize only later that we got ourselves into agreements that are exorbitant, that are costly, that have reduced our policy space. So Zimbabwe is one of those. I think also Ghana does have a framework, Zambia, The colleagues from Namibia has also shared as such. And of course, Mbai is leading the space with Usman very well in Senegal insofar as the framework. Now we are lifting these as some of the first movers in Africa in terms of being proactive in protecting that space. Why should there be a framework at country level? And this is important. Those who want to source these credits, these units, these internationally transferred mitigation outcomes are from largely developed countries, right? Because they have commitments additional. So it's not in their interest necessarily to take a lead in guiding us, other than to making certain that they get, the best share they can in terms of this, whilst they continue to do or act, in an ordinary sense. So leading in your respective jurisdictions on this, Mbai shared the broad, outline of these provisions, but you still have a responsibility. The lessons we have observed in this market is that there are jurisdictions in which, after having entered, into the carbon market space, there were then later calls to either put a moratorium on some of these activities because of the realization that parties realized that they would be running into losses, because there's also the voluntary carbon market space, which in some jurisdictions is not necessarily, regulated. Yet the carbon budget space and the commitment we have is only but one. So what is derived as units under one jurisdiction serve to split, the carbon budget space of that particular, jurisdiction. Program Director, let me take a pause here, but I meant to reflect and also ride on the points that Mbai has said, but also some, highlights on some key lessons, and mainly, why should we pursue the framework within our domestic jurisdictions as well? Thanks, Program Director.
Thank you very much, Mkutazi, for those examples. And indeed, I think the issue of environmental integrity and the integrity of the markets is very critical. Allow me to kindly ask Alec to briefly explain the roadmap of winding up, the CDM and also transitioning, to 6.4. What are the highlights there? And also for you to give us the status of the CDM Trust Fund. Where are these resources going? What is the feeling of the UNFCCC? Alec, please.
Thank you, Nesbit. Well, your question was almost being answered yesterday in a session which I was co-chairing, but unfortunately we could not reach an agreement. We were almost knowing the dates when the CDM was going to wind up, and we were almost there as at yesterday. So maybe as a way of background, let me just give a background of the CDM. So the CDM existed under the previous climate regime, under the Kyoto Protocol. So it came to an end once we adopted the Paris Agreement. So there were units that were generated prior to adoption of the Paris Agreement. These are units that we call pre-2020. And those units are still being used for countries to meet their NDCs. And as you are all aware, the first NDCs will either end in 2025 for some countries, but 2030 for other countries. So that was really the basis for the negotiations in terms of coming up with an end date for the CDM. As an African group, we were proposing that the end date should be the end of the first NDCs, which, under normal circumstances should have been 2030. But in the spirit of compromise, we said, okay, we can go with 2025 when some NDCs will end. But yesterday, in our last text, Brazil came up and said, no, I think let's put it aside. Let's continue discussions up to the next COP. So that was the decision as at yesterday. So in terms of the end date, it's not yet known as at now. But indications were that, if we had agreed on 2025, then the actual end date was going to be around 2026 or 2027 because we needed to have given the Secretariat time to wind up. So now coming to the issue of transition, because there are projects that were, that came up under the CDM, and a lot of companies invested heavily. So you can't just, close them up. So there was a provision in the Paris Agreement that those projects could be allowed to transition into the 6.4, which is actually the successor to the CDM. So in terms of timelines, those are well set. The timelines are well set. So for project developers or PPs, project proponents, they need to request or write to the Secretariat requesting for transition between 30th June 2023 and 31st December 2023, meaning in 2 weeks' time. So the timeline really is very, very short, and the deadline is very, very strict. It's cast actually in stone. There's no room for change. But in terms of host parties to give, so what is going to happen is a project developer with a CDM project would write to the Secretariat indicating that I want my project to be transitioned to the CDM between 30th June and 31st December. And then the Secretariat will write to the host party for their concurrence. So the host party has been given a timeline of up to 2025 to accept. So it's actually important to know these timelines, especially for project developers. If you miss this deadline of between 30th June and 31st December, forget. So that's with the transitions. Now, when it comes to the status of the trust fund, so again, the question would be, what is this trust fund and where is the money coming from? You heard Mbai say, under the CDM, there was a share of proceeds percentage of 2%. So for each income that comes from the CDM project, 2% would go towards this trust fund to help with adaptation, to help developing countries. So under the new arrangement, under 6.4, that percentage has gone up to 5%. So the 2% is actually the source of this trust fund. And as I speak now, what is in the trust fund is around 53 million. The 40 million is in the reserve, and 13 million is the cash that is available. But there's also money that, because the CDM projects are still being reviewed, and there's still an inflow of monies from CDM projects. So our estimation is that by the close of the CDM, we anticipate about 70 million US dollars. So that was, again, another crucial discussion point, under the CDM. As AGN, we had said this money should actually go to the adaptation fund and also help with the capacity building. But our partners also were all agreeable in terms of taking the money, some portions of the money to the adaptation fund. But they wanted part of the money also to go to 6.2 to help with the infrastructure. There, we could, not agree. So in terms of the usage of the funds, the majority of the funds will go towards adaptation fund to help developing countries with the adaptation. Yeah, so what else? Yeah, so I think that's that in terms of the trust fund. So as we stand, as of yesterday, what was agreed is that let's wait for a technical paper to highlight in terms of the expenses that are still required by the Secretariat to run the Secretariat before the CDM actually comes to an end. And then at the next COP, we'll be able to make a decision based on information that will be prepared by the Secretariat. So we'll actually make an informed decision, because the issue that we had was, if we say 10 million goes to adaptation fund, it's based on what? Yeah. So we needed that clarity from the Secretariat by asking them to prepare a technical paper so that they can tell us that they still need so much for them to operate. So once those figures are known, then we'll start fighting again next year when we meet at the next COP. So I think those are the responses I can give, Mr. Moderator. Thank you.
Thank you very much, Alec, for giving us those highlights on the CDM and how the resources will be distributed. Colleagues, we come to the question and answer session. I will take questions from the floor. Are there any questions, areas of clarification? Yes, I have one hand there. Can I also have a show of hands if there are any other hands? A second hand there. Okay, please, can I have the mic? Yes.
I guess when Ndai was explaining the process, he also referred to the voluntary market, and he referred to gold standard and Vera's work, and I don't understand. Well, the voluntary market is really more important or very important with respect to Africa. And this is where really business is, the voluntary market for Africa, especially carbon offset from forests. So I didn't understand exactly, well, I mean, he referred to it as sort of competition, the voluntary market to 6.4 and the new process. Am I right, or the voluntary market has also access, or, you know, how would all of this treat the voluntary market, the old voluntary market and the work of Vera and Gold Standard, for example?
Thank you very much. I'll take the second question.
Thank you very much. I'm called Stella Kabiri. I work for Sasakawa
Interpreting
Africa
stops.
Association as lead regenerative agriculture. And I liked your presentation, Mr. Mbaye, but I would like a small clarification about, you were talking about that projects can now, can now register on the portal or something. Are you talking about projects in terms of the national level, or these projects that are already on the ground? Because like that gentleman has said, there are already projects on the ground that are looking at voluntary carbon markets. Are they supposed to change that now and add her to this one? Are you talking about, can anyone who is working on any project access this, this portal, or it's only done at national level? Thank you.
Okay, can I, yes, please.
Okay, my name is Mamadou Bari. I'm from Senegal. My first question is about double counting. I don't know if the institutional arrangement is set up by UN or by the host country, because we are talking here transparency. Who follow this counting? It is an institutional set up by UNFCCC, or by the country host. Second is about voluntary market and 6.4. About the cost. When we talk about voluntary cost, it is mean that the country can voluntarily propose the price, or the price is fixed, even if it is from 6.4 or voluntary market. Thank you.
Thank you very much. I'll take the fourth question and then allow the panelists to respond. Then I'll
Donc
take
on va
the next
laisser
round of
nos panélistes
questions.
répondre aux questions et ensuite on pourra
Good
passer à
afternoon.
d'autres.
Thank you for the presentation. My question is
Merci
about
pour la
issuance.
présentation.
So today we
Ma
speak
question,
that the
c'est sur
mechanism with issue
l'assurance.
credits,
Donc,
but what
aujourd'hui, on a
happens in
parlé
case the
des
credits were already
mécanismes,
issued with Gold
de
Standard or with Vera,
délivrance de crédit.
in case
Donc,
of a
que se
private project
passe-t-il
or a
en cas
governmental
de
project?
projet
Can these
gouvernemental
credits
ou
be
privé?
transferred
Est-ce que
under
ces
the
crédits peuvent
mechanism?
être transférés?
How does it work, if we can make an example?
Thank you. I'll allow Mbaye and colleagues to respond. Mbaye.
Very quickly, the voluntary market and the compliance market. The compliance market is the market that is regulated by governments. And the voluntary market is a market where you don't have the intervention of the governments. Meaning, in the compliance market, the government may put on place a regulation and allowing participants to that regulation to meet the criteria defined by the country to offset their emissions. Giving an example, you can be in a developed country because they have that until more than 30 years. They can say in a cement factory, you can't emit more than 600 kilo per ton of cement generated, produced. If you generate more than 600 per ton, you will pay a tax. But at the same time, those governments allow those cement plants, instead of paying the tax, to buy emission reductions to compensate the excess of their emissions. If they can buy the emission reductions cheaper than paying the tax, they will go for that. It's why they create those domestic market. But it's regulated by governments. In the private, what we call in the past, this voluntary market, they are just companies that have no commitments. They are not bounded by the regulation. They just wanted to have their corporate social responsibility or doing philanthropy. They said, I buy units to support projects with that contribute to decreasing the emissions globally, but at the same time have social benefits, for example, cook stove, biodigesters or something like in some countries, or forestry activities that are not regulated by the market, and the buyers are not bounded by regulation. They buy just because they want to participate in the global efforts or to support some sustainable development projects. In this new area, those standards we call in the past voluntary standards, like gold standard, like Vera, they can participate in the in the compliance market as well as in the voluntary market. They have that possibility now. They can generate units for compliance. They can generate units for voluntary market. It's why they will come in competition with the centralized mechanism of the UNFCCC, which also generate two types of units. Units for compliance and units for non-compliance. The main difference between the two units, compliance and non-compliance, is that the units for compliance are authorized by the host country. And they are authorized because they will have what we call corresponding adjustment. The host country state that those units, I authorize them to be sold to someone else because I will not use those units to meet my commitment. It's the objective of the authorization. Now we will have the standards we call in the past voluntary standard that will generate voluntary units as well as compliance units. It's why they call themselves now not voluntary standards, they call themselves independent standards. For in the past, gold standard, everyone called gold standard a voluntary standard. But now gold standard calls itself independent standards. It's the same for Vera. It's the same for the standard we have in the Gulf. And we have emerging standards that can generate two types of units. Now, project registration. It's not the government that will register the project. It's project proponent. You are individual, you are private sector, you are NGO, you are local government. You have your project. You come in the 6.4 to register your project, or you go in the independent standard to register your project. But the main difference here is if you come in the 6.4 UNFCCC UN mechanism to register your project, you need to have the approval of the host country where you want to implement your project. It's you register your project, but you need the approval. Double counting, you have national registry to track all the transactions, and you report every year in an electronic format. And the UNFCCC has an international registry. And all the reports submitted in an electronic form will be aggregated in this international registry to ensure that there is no double counting. And each remission reduction has a unique identification to ensure that there is no double counting. And lastly, price of the units. The price, it's a market. It depends on the demand side and the availability of emission reductions. And the price may differ. At some time, we had under the KP, the price that fall down, and we had just $1 for 1 ton. But now it's around $10, but it can be $50 per ton. It depends on the market.
Okay.
Colleagues, if you want to add something.
Very quick ones. You know, we are running out of time.
Yeah. Let me just respond. There was a question on the transition.
Yes.
Yeah, so for a project to be eligible for transitioning, it must have been a registered CDM project for it to transition into a 6.4 project. But of course, a lot of projects, when they saw that there were problems with the compliance market, they moved into the voluntary. So for as long as it did not get deregistered under the CDM arrangement, it qualifies to transition into a 6.4 activity. So I think that's the credit that we need to make, because a lot of project proponents, especially in Zambia, were asking about that. But also, just to stress on the issue of corresponding adjustment, it works like a bank transfer, but in the opposite way. So if Mbai sends me $1,000 into my account, instead of my account gaining by 1,000, my account actually will do what? Will get reduced by 1,000, and Mbai's will go up by 1,000. So that is to avoid double counting. Yeah. So that's what corresponding adjustment means.
Okay. Thank you very much. I'll take 2 questions. There was a hand at the back, then here, I think those 3. Do you still want to ask? My colleague at the back, yes.
Good afternoon, colleagues. Thank you very much for the informative presentation. I'll be a bit conflicted on my side. It's in relation to negotiations, right? Because I saw there's an issue, I think, that somehow decide to divide us as Africa, right?
There's an issue that can divide us as Africa?
Yes, it's an issue which is in relation to the issue of special requirements, where we are talking about preferential on financial issues, which is mostly brought by obviously the developed countries, wherein they are talking about preferential issues for small island state and least developed countries, right? And I think colleagues will recall that this issue has been discussed, and in the Paris Agreement, we have got the right language which we have agreed on. As the Africa Group, what are we saying about that? Let me leave it at that high level.
Okay, so what is the Africa position on the LDCs and seeds?
Yes, in fact, not necessarily LDCs and seeds. I agree that LDCs and seeds must be given the special treatment, right? But I'm saying in the Paris Agreement position that we have agreed upon, it's more elaborative because it talks about Africa, including LDCs and seeds. So I'm saying, what are we saying about it? Because I see it's cascading in different agenda items, not only Article 6, but even in other agenda items. That's what the developed countries are trying to divide us on.
Okay.
The second one, I think it's related to Article 6. I think one of the area where we have seen Africa benefiting more, it's on the program of activities, right? Which were even regional, not necessarily maybe per country. So the regional ones also made Africa to benefit more. How do we see that being operational under Article 6? Thanks.
Okay. Thank you very much.
Thank you. Stefan Hoch from Perspectives. I have two brief questions. No, sorry. Yeah, no problem. And by one question for you. I was very glad that the topic of CDM transition was raised earlier already. And, you know, since COP12, we've been talking about access to the CDM by Africa at the latest in Nairobi. I think in 2008 or something like that, or 7. Now, I've checked the website. I've checked the UNFCCC website yesterday, where those CDM activities that have submitted for transition are listed. There are almost no African projects. And I really struggle to comprehend, because a lot of effort has gone into this, building these projects. It's a very simple process. You don't need government approval. You can just send a 2-page form to the Climate Secretariat, and the deadline is in literally 2.5 weeks. The only reason I can imagine is a lack of awareness, you know, for this opportunity and for this also requirement. So the first question to you would be, you know, how can we, maybe also on a regional level, you know, with UNECA, with the Western African Alliance, the Eastern African Alliance, how can we make sure that this awareness is stronger among those African carbon market participants, though that we don't miss this opportunity now, and for which so much effort has been invested? And also, how can we forward-looking translate that into now building the new requirements? You know, when authorization is hopefully decided today or tomorrow, with your good efforts, how can we make sure that African countries are quickly then establishing these at home so that the new projects can also come in? And the second question, I promise to be very short, for the South African colleague. Have you looked at the potential of carbon markets to also help mobilize additional resources through now Article 6 for the just energy transition effort in South Africa, which is very important? And maybe that even applies to Senegal, but South Africa has been working on it for a longer time. Thank you.
Thank you very much. I think there was a hand somewhere. Yes.
Je vais parler en français.
I'm going to
I'm going to speak in French because since the beginning, all the speakers speak in English. Can I go? Okay. Je m'appelle Mamoudou Ouedraogo, je viens du Burkina Faso, je suis le coordinateur national de l'Association pour l'éducation et l'environnement ADG. Alors, je dois d'abord vous remercier pour cette communication. Je ne suis pas spécialiste de l'article 6 de l'accord de Paris, mais je suis de près parce que notre organisation travaille beaucoup avec les producteurs à la base au niveau du Burkina Faso et nous savons que tôt ou tard nous allons y parvenir. Mais l'inquiétude que j'ai, si un pays développé venait par exemple chez nous au Burkina Faso pour payer du carbone dans un village donné, est-ce à dire que la superficie qui a été utilisée ne peut pas être exploitée pour d'autres fins, dans le domaine de l'agriculture par exemple? Et si ce pays venait à payer, c'est pour combien de temps le paiement doit être renouvelé?
Should the payment be renewed? How long does it take if the payment is renewed? If there is a deadline after the deadline, is the seller able to sell to another client?
Voici les trois questions
So that's the three questions I would like to raise. Thank you very much.
Thank you very much. I will ask Mbaye and colleagues, to respond, and then thereafter I'll ask, Yemi to wrap up.
I will try to answer some questions. Africa, LDCs, and seeds. As you said, it's a general issue, and it's still under discussions. Since Paris, the African group tabled that issue, the special circumstances of Africa. But we need to recognize that under the Paris Agreement, you only have the seeds and LDC that have special treatment. It's why the African group brought that issue on the table. It was different from the COP20, it was COP 2015,
21.
The Paris Agreement.
COP 21.
COP 21.
Yes.
COP 21 in 2015. And it was different, and every COP it comes back on the table. Until this COP, it was presented by the African group, but still under negotiation because some countries don't want that agenda item to be included in the negotiation. But at this point, under the Paris Agreement, you have only LDC and seeds. While under the convention, you have Africa, seeds, and LDCs. That's the main difference. So the issue we were discussing in the Article 6.4 was the exemption of the share of proceeds in LDCs. Because based on the special circumstances of LDCs and seeds, that issue was brought on the table, and after discussions, the supervisory body proposed to apply that exemption only to LDCs, because it's not an issue of vulnerability in terms of the negative effects of the climate change. It's an issue of economic capacity. And you have some seats that have a lot of money, like Singapore or some others. We can't give that exemption to countries like those ones, because it's about implementing the capacity to implement projects. It's why in the proposal we have only for LDCs. It's why you have seen OASIS representing the seats opposing that exemption. Okay? Now, when it comes to POA, you are right. Africa started to benefit from this CDM when we had the POAs. For the ones that are not familiar with carbon market, POAs are program of activities. Instead of, because in China, in India, in Mexico or Brazil, you have very large projects. In Africa, you have only small projects. But the POA allowed to bundle many small projects and having larger emission reductions. It's when we have that concept of bundling many small projects and having program of activities that Africa started to benefit from those kind of projects. In the 6.4, that will be embedded. At this point, the recommendation made by the supervisory body are addressing only the project activity. But since adopted, we will develop the standard for program of activities. It's two-step, but it will come based on what we will be adopted on the program activity. The transition, Stefan, for the transition, you are right, we need awareness. Because we have already from the Secretariat sent the list of all projects that are eligible for transition to the DNA, designated national authority of each country. They have also sent an email to all projects that are eligible. But maybe the email address has changed or many others. So it's why the DNAs have a role to push for that awareness. Because you have only two weeks left. After that, it will not be possible to transition. If you haven't submitted your request until the 31st of December, it will not be possible to transition. And you have only to fill a form. And there is no risk, nothing to pay, no commitment. If you change your mind, you can change your mind at any time and not transitioning. We don't understand why project developers have not submitted their requests for transitioning. But we need, through the alliance, because we have the West African Alliance on Carbon Market, I see Iran there. We have the West African Alliance, I see Wabi also, covering all those countries. They have to push through the DNAs all project developers that have project register just to submit the request for transitioning. Even if they want, they can change and not transition later. But at this point, that's the best thing to do. Thank you.
Okay. All right. There was a question to South Africa? Yes.
Thanks.
In 1 minute, please.
Thanks for the question. On JETP investment plan, the Just Energy Transition Investment Plan, and the consideration to make use of, I'll be general and to some extent specific and try to relate it to our, can you hear me now? Oh, thanks. Yes. To repeat, I'm saying I'll be general in responding to say that we do have a Just Energy Transition Investment Plan. My understanding is that it will be broadly focusing on blended modes, to finance that. And then coming specifically to the question you are talking, which relates to Article 6 in particular, we are working currently on the framework. We just winded up the technical leg. But in terms of our own guidelines as South Africa, we now need to unfold consultation. Then following that, it is then that the political principles will empower us
or make a decision that is direct, and responding in terms specific to your question. That's how far I can go in that regard. And then, I don't know if any one of us will take the question from the gentleman from Togo, or from Burkina Faso, rather. Yeah. If I may.
Yes.
With regards to that question, I think the point you are checking, it talks to the same question we tried to make, to say that you also need to have your own framework, at country level, like other countries have done, as we cited, the likes of Zimbabwe, Senegal, Zambia, and so forth. Because there are other policies that you need to balance, especially in that context you focused us on. For instance, land use or food security issues versus, because the crediting periods of some of these initiatives, they run over a long, period of time, or the time period for projects can go as much as 20 years, 15 years, and even more in some extents. And the cycles, of crediting within that period may require that you stick to the terms over which you signed at the beginning, of the agreement. So this is why you need to have your own framework, which will guide you in terms of what are the priorities that you need to balance that talks to aspects of sustainable development within your jurisdiction. Otherwise, signing this blindly may expose, our countries, to enormous risk. So you need to have your framework, so that at least you also build confidence within your jurisdiction. You do not want to have a situation in which you are viewed to have either reneged on an agreement or an MOA that you signed that you could not, meet. I'll stop at that. And then I understand the special needs and circumstances for Africa is still undergoing, consultations amongst parties. That's all from my side. Thanks.
Pour ajouter à votre question,
Interpretation stops here.
quand vous faites de la foresterie et que vous avez un projet foresterie que vous enregistrez aussi bien donc aux Nations Unies ou bien dans un autre standard, comme il l'a dit, vous avez une durée de crédit. Ça peut être 25 ans, ça dépend du mécanisme, ça peut aller jusqu'à 60 ans, durant laquelle tu peux gagner des crédits et vendre les crédits. Mais une fois que tu as dépassé cette période-là, tu ne peux plus gagner de crédit sur cette forêt-là, même si la forêt demeure. Tu ne pourras plus gagner des crédits là-dessus. Mais pendant que tu as mis la forêt, suivant donc le standard, ça n'empêche pas que tu fasses de l'agriculture dans les mêmes zones, mais sans dégrader la forêt. Donc il y a des mesures spéciales pour ne pas dégrader la forêt. Merci.
Thank you very much, colleagues. Allow me to call upon, Dr. Katere Yemi, to give us a 5-minute, roundup of the activities.
Thanks, moderator, and colleagues, thank you very much. There was a journalist from The Guardian who was asked to explain what are carbon offsets. And he said a carbon offset or carbon offsets are an imaginary commodity created by deducing what you hope happens from what you guess would have happened. So, very complicated. And these discussions, as I listen to the presentation, it's not simple. So thank you for trying to unpack these very complex issues. But also the other thing is that as I listen, we know that offsetting is not a new thing. And as you mentioned, we've had the CDM. And it's good that we are learning some lessons from the CDM. So you mentioned the grievance mechanism that wasn't there, and it's going to be here. But what is important is that Article 6 is more than just a technical mechanism. It has a lot of social and economic implications. Where these projects are going to be implemented, how these projects are designed, has major, major implications for these local communities. We know that in sub-Saharan Africa, 70% of the local communities are dependent on forests, on woodlands, on biodiversity, on nature for their livelihoods. And so when we're talking about these projects, it's important that we take that into consideration. But also, when we're talking about these grievance mechanisms, we need to bring it down to the local level. So when we say there's a grievance mechanism, how is somebody in a village where they're talking about this project and they're telling them they need to move because of, of carbon trading, how do they access this mechanism? Do they have to get on a bus? Do they need an email to get onto the portal? Those are real issues that we need to think about, because we come here in these corridors and we make a lot of nice statements and we write things that look nice, but we need to think about the practicality and how those people that are likely to be impacted can actually make use of these tools and mechanisms that you're going to be putting in place. So please think about that. I like the fact that we talk about 6.2 and 6.4, but we are silent about 6.8. And yet, we're talking about Article 6, and that it must move together. And here we're preoccupied just with 6.2 and 6.4. It is really important because here we're starting to talk about joint mitigation and adaptation for climate action. These are under 6.8. And this is where we start to look at the issues of non-market mechanisms, non-market nature-based solutions, because the other nature-based solutions are going to be market-based. And those are the ones that are likely to impact communities. So please, in future, let's have a package. Let's educate everybody about Article 6.8, because Article 6. 6.8 has remained under the radar, and it continues to be so. But really, if we want to talk about tackling climate change, this is where it's going to happen. And selling carbon and offsets is not going to address the global climate crisis that we are facing. We need to be real about that. It's about making money. So let's take that into account. The other thing is, let's think about how Africa becomes a market setter and not a price taker. If you look at our current predicament on the African continent, it's because of historical extraction of our resources, selling them to the global north, and an unfair exchange price for those resources. And that is how the north has become developed. They now have the wealth and they don't want to share the wealth. So when we say we need climate finance, they're not willing to give climate finance. They now say, we'll do mitigation and you raise money, and in 25 years, how many millions did you say you have from CDM? 70 million. You'll have 70 million when you close in 2025. Hey, we need serious money for climate, and it's so. If we failed to raise it under the CDM, are we going to raise climate finance? So let's think seriously about this. So how do we become price setters? Right? Not just takers of price, so that we are just exporting our carbon, and I still don't understand the logic. We send our carbon there. These guys, they carry on business as usual. We now increase our emissions because you've transferred one unit, you add to it, and those that are receiving, they deduct. Make it make sense. So I think we need to be thinking about these issues and asking some tough questions about that. I hear a lot about transparency. We talk about transparency when we are here in these negotiations. When we go back home, there's no transparency. Right? There are deals being cut. they're not being discussed. We hear it's going to benefit people, but we don't know how, because there's no discussion. So we need to ensure that when we talk about transparency here, we need to ensure that that transparency happens where the rubber is going to hit the road, which is at the country level. So we really need to be pushing our leadership from Africa to really ensure that there is transparency. Civil society organizations are not anti-government. They really can make a contribution, a valuable contribution. We are on the same side, and we can help to bring greater rigor into these issues. We don't always have to agree, but we need to be around the policy fire and have a conversation and to be listened to and make contributions. It is not happening. So let's push for this transparency to happen on the ground, not just here in the halls where we say the right things, but we do the opposite when we get back home. These are the things that we accuse the developed nations of, that, they have double standards, they have this and this, but sometimes we're doing the same thing ourselves. So let's ensure that when we get back home, we have transparency. So with that, just want to thank everybody and thank you for sharing. It's very useful, and every time you think you understand Article 6, you listen to somebody speak, you realize that there's a lot that you don't actually understand. So the more we talk, I think the better the understanding. So thank you very much.
Thank you very much, Yemi. It just remains for me, colleagues, to thank all of you for taking time to come and, listen to this, discussion. We will continue, with this discussion. We have on the cards a program for capacity building, on Article 6, so that all of us are on the same page. So thank you very much. I really appreciate, coming through. Thank you.
Okay. And thank you for raising the issue of 6.8, which is very important.